Yes, please. You're right. Lockie, watch out, bub.
Kirsty Garish has just 1 day left to move everything out of her family's home.
It's supposed to just slide off.
She's trying to keep up a brave face for her children.
Being his age, maybe it's just we're trying to make it a little exciting for him. All right, Bree, Lockie's coming. It's like a new adventure kind of thing rather than, you know, what's actually going on. That we lost it. Got to find somewhere else to go.
Things were very different 4 years ago when Kirsty and her partner Francis Murphy bought the house.
We were just so happy to have it home. The kids were stoked. There was a swimming pool, you know, they could have friends over for pool parties.
They used the equity in their home to get a loan to expand their excavation business.
Basically anything in the building industry, you know. They pretty much give us a call and we're there to do whatever, retaining walls, swimming pools, whatever's got to be done.
They couldn't get a loan from a bank because their business had no financial track record. So Kirsty and Francis went online in search of a lender that would give them money. The company they found was a small business lender called Mango Credit, which offers short-term, high-interest loans. It offered Kirsty and Francis $300,000.
We just didn't have enough of the paperwork to try and go a different way. It was always only going to be short term.
In hindsight, we should have probably went another way.
The details of the loan show the massive financial risk Kirsty and Francis were taking on. They put their family home up as security. The annual interest rate was 21%. But if they missed a repayment, that jumped to 150%. They'd be on the hook for monthly repayments of more than $37,000.
We never were going to default, it was not an option. That's why we paid it for the 12 months without fail. There's never a path we wanted to go. It was only a short-term thing.
But in January this year, Kirsty and Francis were sent down that path after they told Mango Credit they wanted to refinance the loan.
I'll have to go in this back row or in the middle.
Kirsty says she made a verbal agreement with Mango's owner to hold off on the next repayment in the meantime.
He said, do not make the January repayment as it can be rolled over in your refinance because it was supposed to all be refinanced in January.
Kirsty later made a sworn statement that this happened. Mango denied this when asked by the ABC. What's not in dispute is it put the loan into default and started charging the higher rate, 150%.
Things just gone crazy and we were just trying to do the right thing. We had good people on board to help us get another loan and whatnot, and it just went crazy.
Kirsty and Francis tried complaining to the government's new Australian Financial Complaints Authority, or AFCA, but they were told that Mango Credit operates outside of its jurisdiction because purely business lenders are not obliged to be part of AFCA. Even though Mango Credit tells borrowers its mortgage arm is licensed, Mango Credit itself doesn't have a credit licence.
Many of the providers out there aren't required to be licensed. If you borrow from an unlicensed lender and have a dispute, it means you can't take your complaint to the Australian Financial Complaints Authority and you're forced to go to court.
You got no leg to stand on. You literally have nowhere to turn and no one to help, and there's no one that can hold them accountable for this.
I'm Warren from the Sheriff's Office.
By April, Kirsty and Francis's debt had blown out, and in September they lost a legal battle with Mango over the repossession of their home.
So, have you got keys?
Yeah, they're just on the veranda. Is that all I just got to do? Just give you guys the keys?
2 weeks ago, the sheriff arrived to confiscate the keys to the house.
And they said it was fine, that there was stuff left in the house. That's completely fine. And that they're sorry to have to do it.
Mango Credit is clearly a successful business. Its owner, Yanis Derhams, owns a number of properties, including a 3-storey harbourside home in Sydney. When 7:30 contacted him, he insisted we talk to his lawyer.
Mr. Derhams, Pat McGrath, from the ABC. How you going? Have you got a moment to speak to us?
When we approached him directly, he didn't want to answer questions about his company's business practices.
Mr. Derhams? Excuse me, Mr. Derhams. Did you tell Kirsty Garish that she didn't have to pay the mortgage while she refinanced? That's what she's.
But through his lawyers, he denied he told Kirsty and Francis to hold off on making the repayment. In a statement, he says he was, in fact, entitled to put them in default earlier because they had been late in making some repayments last year, but decided not to. He says he verbally offered to accept a lower amount to pay out the loan, but Kirsty and Francis never came back with an offer in writing. And he insists the loan was fair and his customers got their own legal advice. Mango Credit is among dozens, possibly hundreds of unlicensed lenders, often known as shadow banks, targeting Australian small business.
It is the Wild West. People can go online and get access to an unregulated loan too easily.
It was really important for lenders that were lending to small business particularly to...
Australia's Small Business Ombudsman sees a simple fix: make small business lenders subject to the same complaints regime as banks and other lenders. In fact, some small business lenders have already signed up to do so.
I think we broaden access to mediation and other forms of justice outside the court system so that small businesses have got somewhere to go if a fintech, a non-bank lender does the wrong thing.
There's a darker side still to Australia's shadow banking industry. We've uncovered evidence that some lenders are giving out loans dressed up as small business finance, but they're actually for family homes and investment properties. Because they're giving the loans to companies rather than individuals, they don't have to comply with consumer protection rules. Carol James found herself in the hands of an unlicensed lender when she needed quick money for a home she was building in 2015.
Came across Prime Capital Securities. I spoke to a guy, explained the reasons why I needed the finance, and he said they could help me, but I needed to have a company name in order for them to lend me the money.
Legal fees of $7,000. Like Mango Credit, Prime Capital is not licensed and not registered with AFCA. The loan it gave Carol didn't name her as the borrower. It used a company name, her self-managed super fund. And this part of the contract says that the loan is to be used for business purposes only and for no other purpose.
Yes, that's correct.
Was that what it was for? Was it for a business purpose?
No, it wasn't. It was for me personally.
And did Prime Capital know that?
They did know that, yeah. I actually explained all of that to them on the phone before they gave me a letter of offer for the loan. And I do realise that when I signed this, that was in there, but they were aware that the money was for me, not for the company or a company loan.
So, but did they ever offer you the money personally?
No.
Prime Capital denies Carol ever told the company that the money was for personal use. It insists she said it was for a property development, and she signed several documents stating the money was for business purposes.
If you do borrow from an unlicensed lender for the purpose of purchasing property or for any other personal or domestic purposes, then it should be actually covered by consumer credit laws.
There was another fee of $6.5 to Prime Capital.
The annual interest rate on Carol's $360,000 mortgage was 24%.
$9,000 a month I was paying, but that was including admin fees as well per month in that $9,000.
But $9,000 is a lot of money to be
Absolutely
paying every month.
is. It's an awful lot of money.
But soon after Carol paid the money from the loan to the builder, he went bust. Suddenly, the timeline for her high-interest loan blew out, and Carol wanted to refinance with another lender. For that, she needed her loan paperwork.
I reached out to Prime Capital and asked, I think it was in the May of 2016, to see if I could get a statement. Well, I was waiting, I think, almost 5 months for the statement. And look, I had actually got a lender that was willing to give me my finance.
The repayments were piling up while she waited for the statements, and she sought help from authorities.
I reached out to Consumer Affairs, the Financial Ombudsman, and also to ASIC. And I was told from every one of them there was nothing they could do to help me.
She eventually got the statement, refinanced and finished the townhouse. But the $360,000 loan from Prime ended up costing her $130,000 in fees and interest. Prime Capital declined to do an interview, but in a statement to us, it said it was sorry for the delay in getting the documents to her. However, it insists Carol was well aware of the conditions of her loan, something she doesn't dispute.
Do you take responsibility, do you think, for what happened?
Of course I take responsibility. I'm the only one that signed the agreement, the loan contract. But I think Prime Capital need to take responsibility as well for the hardship they've caused me and probably a lot of other people.
Irresponsible lending to small businesses means that people can lose their homes, they'll lose jobs, they'll lose their well-being, and I think that has severe consequences.
Frances and Kirsty are keeping their business above water for now, but they have no idea how they will get back what they've lost.
If we had have been able to find someone else to get us a different sort of loan to start with, we wouldn't be in this situation.
Hi, I'm Lee Sales. Thanks for watching this story. If you'd like to watch more of 730's stories, they are on the left of your screen. And tap on the button below to subscribe and get the latest from ABC News.